HCL Tech has reported a strong performance coming in this quarter. It's a beat in terms of the revenues, EBIT margin expansion as well as the profitability, and management has gone ahead and revised the revenue as well as the EBIT margin guidance upwards. Firstly, just in terms of the guidance, if you look at the EBIT margin guidance for FY21, it stands at 21% to 21.5%. Earlier guidance stood at 20 to 21%. Revenue guidance for Q4 has been revised upwards to 2 to 3% quarter on quarter in constant currency terms. This is for quarter 4. The earlier guidance stood at 1.5 to 2.5%. So there's a slight upward revision there in terms of the revenue guidance. The revenue guidance includes the DWS contribution. It's a beat in terms of the EBIT margin performance, which have expanded 130 bips on a sequential basis at 22.9%. We are seeing the revenue growth in constant currency terms to be strong at 3.5% quarter on quarter. This is higher than our poll estimates of 3%. Profitability, of course, has increased to 27% on a sequential basis. Management states that the key highlight during the entire 2020 has been that they have crossed the revenues of $10 billion in 2020 itself, which according to them is a pivotal milestone. Not just that, they have signed 13 transformational deals across industry verticals during this quarter. Last quarter, they had signed 11 transformational deals. Deals signed include verticals like life sciences and healthcare, technology, and financial services. It's a broad-based growth across verticals and products. However, the growth has been largely driven by Mode 2 as well as the products and platforms business. The products and platform business forms nearly around 30% of the overall revenue mix, and it has grown at 8.3% during this quarter. Management at the press conference stated that the booking momentum has been very strong for the products business. However, products business will see some amount of seasonality. They knew where the products business are going to be used, and they have gone ahead and focused on the same. The commerce engine was a backbone of so many B2B businesses that they use, and they believe that there is every reason to believe that services business is likely to grow in double digits. However, they refuse to take a call in terms of the overall number for FY22. To note that both TCS and Infosys have stated that they expect growth of nearly around 22% in FY22, and in fact TCS has stated that they aim for double-digit growth even beyond FY22, but HCL Tech hasn't called out any such number. In fact, if I'm looking at the overall commentary also coming in from the management, C. Vijay Kumar, who is the president and CEO of HCL Technologies, states that the solid performance was driven by a robust momentum in our Mode 2, Mode 3 businesses led by digital, cloud, and products and platform segments. Our results reflect the success of the strategic investments we have made over the years, including unique ecosystem constructs with all cloud hyperscalers, organic and inorganic investments in a broad-based IP and platforms portfolio, and an enterprise digital transformation value proposition that is truly integrated and differentiated. I'm also delighted to share that we crossed $10 billion in revenues in 2020. This is a pivotal milestone for us as a company and is a result of HCL's vision. So overall, a good amount of positive commentary coming in from HCL Tech. If I'm looking at the growth across the Mode 2, it's grown at 10.9% on a sequential basis in constant currency terms. It forms 23% of the overall revenue mix, and Mode 3 has grown at nearly around 7.1% quarter on quarter in constant currency terms. It forms nearly around 16% of the overall revenue mix. In terms of the products and platforms, that forms 30% of the mix, grown at 8.3%. In terms of the verticals also, we are seeing a very strong growth coming in manufacturing, technology, services, telecom, media verticals. Financial services has still reported a degrowth on a sequential basis during this quarter and also on a YOY basis. But I would say overall good numbers. Some of the analysts were working with a higher revenue guidance of 4 to 5%. So, and they, for instance, Edelweiss states that probably they're being slightly conservative. Overall good numbers coming in from HCL Tech. The stock had already hit record highs in trade post the TCS results itself, and it is trading at slightly around 20x 1 year forward.